Hello, traders. It's Sunday evening, June 13th. I'm going to take a look at the market, see if I can find some trades. Let's get ourselves set up for the week. Take a look at the market. There is not a lot going on. These are the summer doldrums. You can see how the market's been bumping up against that all-time resistance. A lot of red candles. What does that tell us? It tells us that the market has a tendency to gap higher on the open and then to give all those gains back and to close lower than the open. Does that mean that we should be bearish? No. It simply tells you that if your mentality coming into the day is, oh my gosh, the market's breaking out, I've got to buy all these stocks. It's not what you should do. You're going to have a better opportunity to get long through the course of the day. Be patient. Wait for your trades to set up. I'm not doing a lot of swing trading, but I do have a couple of swing trades that I found that I like. I'm going to highlight those. I still like selling out of the money bullish put spreads to take advantage of accelerated time premium decay, and we can distance ourselves from the action so that if we get a market pullback, we've got plenty of cushion. And every day that elapses, tick, 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 time decay is working in our favor. Not a lot of news happening right now. Earnings season is behind us. Major economic news is behind us. The Fed still has their foot on the gas pedal. They're not going to be doing anything. There are no market drivers. Every time the market gets a little bit overextended and tries to break out, we see selling pressure. Every time the market dips, we have buyers come in. We are going to be trapped in a range. So I'm not overly concerned about the downside right now. Option implied volatilities are very, very cheap. That means we've got to go relatively close to the money to get a decent premium. That means that our stock selection has to be excellent. Friday, I highlighted a stock that I really like, NIO. Still like that one a lot. We've already got a position on that for our model account. We sold an out of the money bullish put spread, but I really like this stock. You can see how it continued to power higher on Friday. That was a really nice pick. Video somewhere in here. Stock was able to close higher than that. And if we put up the SPY overlay, we can see how we had a little bit of a market rally into the close and the stock participated. But in general, the stock was able to hold most of its gains very well. I like that breakout through the 100-day moving average. I like the nice volume that we saw here as well. Stock has put in a nice base. I like selling bullish put spreads below that $40 price level with the 200-day moving average right there. So let's take a look at some other stocks. I'm going to keep it super simple tonight, folks. I'm not going to give you a lot of market analysis because I think we're going to be trapped in a range, and I'm not going to go through a bunch of stocks. I'll go right to my list, right to my pop bull list. That is my favorite search for swing trades. As I go down the list, I'm going to take a look at ZM, which I did earlier. Really like ZM. You can see nice horizontal support there. We break down, but easily pop back above it. So now we've got a defined support level right in here. Gets above the 50-day moving average. Earnings right there after the close. Stock able to hold up pretty well after that earnings announcement. And now on heavy volume, you're seeing the stock break out through the 100-day moving average. I want to sell an out of the money bullish put spread. I'd like to get below this 50-day moving average, but there's not a lot of premium. The other thing to keep in mind with ZM is it moves. It moves a lot. And you can see that just on Friday alone, the stock made about a $18 move. So it can move $18 in a day. I can definitely see it pulling back maybe $6 or $7 just to test the bid on this long green candle. If it does that, I'd like to have an order working to try and sell an out of the money bullish put spread. So we're going to do that. We're going to go into the July 2nd expiration. We're going to be selling a 325 put, buying a 322.50 put, and we'll go into the trade screen. There you can see it right there. Sell the 325 puts, buy the 320s. Oh, wait a minute here. You can see that the bid here is less than the ask there. So this is actually a negative 35 cents bid offered at 45 cents. How are we going to get this trade done? Folks, when the options bid-ask spreads are this wide, which incidentally in a quiet market, option bid-ask spreads also tend to widen out, so another reason to be more cautious. But I know the credit that I want to get. We're almost down on that 50-day moving average at 325. So I'm very comfortable doing this spread for a 50-cent credit. If I get a 50-cent credit, I've got 2.5 points between the strike prices. 2.5 minus 50 cents is $2. That's what I have to put up in margin. 50 cents divided by $2 gives me a 25% return on that spread in the course of 3 weeks. Plus July 2nd expiration. As we start getting closer and closer to the 4th of July, we're in pre-holiday mode. The action will slow down. That bodes well for premium sellers. So let's recap that trade one more time. ZM is the symbol. July 2nd expiration. Selling to 325 puts, buying to 322.50 puts, doing that for a 50-cent credit. Right off a pop bull. So easy. Doesn't get any easier than this. Look, I had maybe what, 7, 8, 9 stocks to pick from. I'm going to go down to the very next one. Snap. I love it. Looks good. Double bottom, higher low, well above the 200-day moving average. You'll also notice inverted head and shoulders formation, and there's your neckline right there. Yes, I would like SNAP even better if it broke out above that neckline. You can see the big volume right in here. But I feel pretty safe selling an out of the money bullish put spread below the 100-day and 50-day moving average, both of which come into play right above that $58 level, probably $59. So we've got multiple support. We've got support right here. We've got support here before the spread would get into trouble. So I'm going to bring up the trade screen and we're going to go into the staged order entry. You can see here that I've got a staged order to sell one SNAP, July 2nd expiration, selling to 58 puts, buying to 57 puts for a 20-cent credit. Let's go into the trade screen, go to that July 2nd expiration, take a look at the 58 puts and the 57 puts, and there you can see that spread is currently 11 cents bid, offered at 18 cents. When I have $1 between the strike prices, I like to get a 20-cent credit. So let's recap the trade. SNAP is the stock that I like, selling the July 2nd expiration, selling to 58 puts, buying to 57 puts, doing that for a 20-cent credit. So I like that trade. I think that one sets up really well. I'm expecting both stocks to move higher. If they don't move higher and they just sit here, that's fine. They can even move a little bit lower, and we're okay with that. So I'm not too worried about a great big market sell-off right now. Market's been floating higher. Typically, when you are in a news vacuum, that favors the current momentum. The current momentum is higher. So I believe that these spreads will be in decent shape for the next few weeks. We're only going to try and get these trades done tomorrow, Monday. So we're not going to have this as a GTC order. If we don't get filled Monday, I'll evaluate the stock price movement. I'll evaluate the market. That's what I'm doing on a day-to-day basis because I don't want to be caught by a surprise move in the market. I want to be able to evaluate the stocks each day. This allows me to do that. If I go into the staged order entry screen, we've got two other trades in the model account. We're trying to sell our CARG August 2023 call at 550. That would be a scratch. Keep that order working. We're also short an SCO June 18th bullish put spread, short the 70s, long the 65s. Try and buy that spread back for $1. We'll also try and scratch that trade. SCCO has been moving, and all we need is a pop, given that we're 1 week away from expiration, like we had on Friday. You could see that the stock opened way up here at $69. If it does that again, and we've got a bid working out there, we'll have a good chance of buying it back. It's a very volatile stock. So we need some help on this one. We're going to try and scratch that trade. That's all I've got for you tonight. I really like those two trades, SNAP, bullish put spread, ZM, bullish put spread. Let's see if we can get those trades done. Thank you. We'll see you Tuesday.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.